Hello friends, welcome to the Hindu analysis. Let's look at the first article. It's an op-ed article from page number 6 and this belongs to your GS paper 3, Indian economy, and this article talks about the pressure that is there on Indian rupee because of a strengthening dollar and how rupee is coping up with this pressure. So let's look at this article, let's analyze the article in a detailed manner. The author is Chandrajit Banerjee, who is Director General CII. He is a prominent person. So let's look at what he is saying and let's try to understand in simple and easy manner. The first one that he talks about is why there is so much demand for dollar and what is the impact on rupee because of this high demand for dollar. For this, we need to look at certain things. Why is there so much demand for dollars? Because of this particular factor called inflation in US. In United States, the inflation has gone up. It has gone up to multi-decade high. It has become very, very high. In order to control inflation, United States Federal Reserve, which is the central bank of United States, what did it do? It has increased interest rates. It has increased interest rates in US. When it increased interest rates, what happens? The bonds in United States, they become attractive because they will start offering more interest rates now. Obviously, right? When someone is offering more interest rates, you will be attracted to put your money there. This is one aspect. The other aspect is geopolitical tensions. Because of geopolitical tensions like Russia-Ukraine war, investors all across the world, what do they think? They would always want to put their money in the safest place possible. In across the world, which currency is the strongest? Dollar. So they feel it is better to park our money in dollar denominated assets, which means any asset which is denominated in dollars. Right? So let's put our money in the currency of dollars rather than other currencies. We never know what will happen to stock markets, what will happen to bond markets across the world. But dollar is a very safe investment. Let's keep all our money in dollars. So this is one aspect. The second one is your increased interest rates in United States, because of which people all across the world, what are they doing? They are investing money in US. They are putting their money in US. So what is the meaning of this? If someone is investing in US, means they need to buy dollars. Without buying dollars, how can you invest in US? Think about it. Is it possible to invest in United States without having dollars? Yes. First of all, you need to buy dollars. Only then you can put your money in United States bonds. Because of which the demand for dollar is going up. When the demand for anything goes up, its value goes up. So dollar is strengthening. Dollar is strengthening across the world and against all currencies, not just for Indian rupees, not just with respect to Indian rupees, it is strengthening even with respect to euro, it is strengthening even with respect to British pound and other currencies as well. Which means investors in all other countries, they are selling their stocks, they are selling their bonds in that country, and they are converting the local currency into dollars and they are putting that money in United States bond market and stock market, because they feel that will offer more protection compared to other countries and other currencies, right? And also United States is offering more interest rate because of Federal Reserve's policy of controlling inflation. Whenever you increase interest rate, what happens? Demand, aggregate demand in the economy goes down. Why? Think about it. Whenever interest rate goes up, businesses loans become expensive. When loans become expensive, obviously they will cut down on their investments, they will cut down on their purchases, fresh purchases or fresh investments or fresh expansions. This way overall demand in the economy goes down. When demand goes down, generally it leads to lower prices. When demand goes down, it leads to lower prices, which means lower inflation. That is the reason by increasing interest rates in United States, Federal Reserve is trying to control inflation in United States. This is the situation, and because of this increase, US has become an attractive destination for all foreign investors, and they are buying dollars to invest in United States because they are all coming to buy dollars. Dollars value is going up. It is strengthening across all major currencies of the world, and including Indian rupee. So while dollar is appreciating, obviously Indian rupee depreciates. The impact on rupee is depreciation. Now rupee has touched 80 rupees per dollar, which is a historical low. It is a historical low. It has touched 80 rupees per dollar. So this is the scenario that we are facing right now. Now we have understood that because of the strengthening dollar, rupee has gone down in comparison to dollar. Not just rupee, even other currencies have gone down or depreciated with respect to dollars. Now let's try to understand the effect of weakening rupee. Now we understood that rupee has weakened because dollar has strengthened. Now what is the impact of weak rupee on Indian economy? That is something we will try to understand now. So let's look at the effects of weak rupee. When the rupee weakens, what is the impact on Indian economy? What would you think whenever a currency depreciates? In general, it is beneficial. In general, it is beneficial for exports. In general, it is not beneficial for imports because your import bill will go up, but exporters will be happy whenever a currency weakens. This is in general. But in today's scenario, what is happening? I want you to understand this particular aspect. Let's say there are two aspects to it. We might think it is beneficial for exports, but in today's scenario, it is not so. Why? First of all, not just rupee, other currencies have also depreciated with respect to dollar. This is a very important aspect. If only rupee depreciates, yes, you will have the advantage of increasing exports. But other currencies have also depreciated. It is not just rupee. The currency of euro got depreciated, British pound got depreciated, South Korean currency, Japanese currency, and the currency of major countries across the world have depreciated. So in comparison, there is not much difference in terms of depreciation. Right? So the rupee value with respect to dollar has gone down, but the rupee value with respect to euro, rupee value with respect to what you call, you can take a British pound or Japanese yen has not changed much. Are you getting this point? We have our relation with dollar, yes, rupee has weakened. But when you compare rupee value with euro, there is not much difference. Why? Along with rupee, even euro also depreciated with respect to dollar. The problem that we are facing today in India, across the world, all countries are facing. Across the world, in all countries, these investors are selling their stocks and bonds, and they are putting their money in American bonds, because of which there is this outflow of dollars that is happening not just in India but across all the countries. That is why our currency has not depreciated much with respect to other currencies. So when there is not much difference, how can you expect your exports to go up? It's more or less same, right? Only with respect to US you can think your exports to go up, but with other countries Not much difference. This is one aspect. Second aspect, very very important aspect, look at this. There are certain products that India exports. India exports petroleum products. India exports petroleum products. Very very important point. I am not saying wrong. You are thinking India exports, sir? India imports petroleum. Now we don't have enough petroleum. You are saying India exports. Yes, I am saying right. India, remember this, India imports crude oil. India imports crude oil. Right? India has lot of refineries like your Reliance Industries Limited and BPCL, HPCL. After importing crude oil, after refining it, we produce petrol, diesel, aviation turbine fuel, which is something that is used in commercial flights, right? Kerosene, high speed diesel. These are the products we produce after refining crude oil. These are called petroleum products, and petroleum products are one of major constituents of our exports. We use some of them domestically and we export some of them. Now you might think, because Indian rupee has weakened, these exports will benefit. Yes, exports will benefit. The problem is, to export these products you need to import crude oil, right? Only after importing crude oil you will be able to export these products. So not much benefit. If you want to export, let's say 100 tons of petrol, you will need to import crude oil first. Even if you are getting benefited because of the export, but before that you are paying a higher bill for imports. So both of them balance out. So not much benefit with respect to petroleum products. And there are other products like gems and jewelry. Same problem here. What happens in gems and jewelry? In order to export gems and jewelry, India exports gems and jewelry, but for that you need to import gold. Only after importing gold you will be able to export gems and jewelry. See, if you are producing something completely in India without importing the raw material, such exports, yes, I agree. But if you are importing something to produce something and again exporting the same thing, what is the benefit you are getting? You are importing crude oil, again you are refining it and sending it back, or you are exporting it. Even if exports go up, obviously imports have to go up prior to that. Same is the case with gems and jewelry, and same is the case with some of the electronics as well, because the raw materials are inputs of these electronics. India has to import first. So we call these exports having very high import intensity. Very very important point. Some of the exports that we are doing today have very high import intensity, which means you need to import first, only then you can export. So there is no benefit even on those products. That is what the author is saying. First thing, other currencies have also depreciated, so not much benefit. Second thing, even if there is benefit, these are the issues that we are facing, right? The third problem is global demand is less. Global demand is less for exports. So because of which Indian exports have not improved. In general, we expect with weakening of rupee our exports will improve, but because of the reasons I have explained now, Indian exports are not going to improve much. This is one problem. Whereas on the other hand, what is the impact on imports? Obviously there is a very high impact. First of all, India imports a lot of crude oil. India imports a lot of gold. So the bill for crude oil now goes up. The import bill for gold also goes up, right? So this is the problem with weakening rupee. We also import edible oil from Ukraine and Indonesia. Even again you need to pay in dollars. Again you have this particular problem. On the other hand, because of weak rupee, we have issue with debt payments also. What is debt? Debt is something that we have taken, the money that we have taken from international banks or some other countries, right? When you are taking money, you need to pay back. You need to pay interest every year, and if it expires, you need to pay principal also, right? And also Indian government issues lot of bonds to foreign investors, dollar denominated bonds. not rupee denominated bonds, dollar denominated bond. What is the meaning of dollar denominated bond? Indian government, when it issues bonds, it takes money in dollars. Whenever a government issues bonds, you have to mention the currency denomination. Is it a rupee denominated bond or a dollar denominated bond? If it is a dollar denominated bond, that means you are taking loan or you are taking money from people or investors in dollars. When you are taking money in terms of dollars, you have to pay it back again in dollars. Right? India has several such dollar denominated bonds on which it needs to pay interest rates as well as the principal. Those interest rate payments and principal payments are now getting expensive because you need to pay in dollars. Unfortunately, dollar has strengthened and you have rupees and rupee has weakened. Let's say you need to pay $100 as interest. $100 as interest. Simple example. Right? Earlier, let's assume dollar equal to 70 rupees, which means last month you paid 7,000 rupees in Indian currency, 7,000 rupees as interest. Now the same $100 will mean now rupees 80 rupees, which means dollar equal to 80, $1 equal to 80. So you need to pay 8,000 rupees. So your bill, interest bill has now gone up. This is another impact of weakening rupee. Your imports become costlier, your debt payments become expensive, costlier. These are the problems that we are facing because of weak rupee. Are they all? Do we have more problems? Yes, there are more problems. Another problem is from the point of view of investors. Investors always would want to keep their money in strong currencies. In strong currencies. Let's say there is a foreign investor who has loads of money. He has loads of money. Now he is thinking to put his money in India, like Indian stock market or Indian bond market. Indian bond market. If he wants to put his money in India, he needs to sell his dollars to RBI exchange and he has to buy rupees from RBI. Only after buying these rupees he can come and put that money in Indian stock market and Indian bond market. Let's say when he was investing dollar equal to 70 rupees. Let's assume $1 equal to 70 rupees. I'll give you one example, you will understand it in a detailed manner. So there is one investor, there is this investor, he comes out with $100 of investment. So he puts this money, he wants to put this money in Indian stock markets. Okay, he goes to RBI. Okay, he goes to RBI and let's assume the exchange rate is 70 rupees. So he goes to RBI and gets 100 into 70, 7,000 rupees. And he puts it in Indian stock market. So after some period, let's assume after some period, so he has decided to withdraw the money and go back. So this 7,000, let's assume it has gone up to 8,000 rupees because he has invested in stock market. The stocks have gone up. Now 7,000 has become 8,000. Ideally, with this 8,000, with the previous exchange rate, if the same exchange rate continues even after 2 months, he would get 8,000 by 70, right? 8,000 by 70, because earlier $1 equal to 70 rupees. These many dollars, it would mean 7 8s, 7 9s, 63, 7 11s, 1 somewhere around 134 point something, 114 point something. Right now he will get 114 point some dollars ideally. But if the exchange rate has gone down, if rupee has fallen to 80 rupees, if the rupee with respect to dollar has fallen and dollar becomes 80 rupees, how much he will get now? 8,000 by 80, again same $100. Are you getting this point or not? This is scenario 1 and this is scenario 2. In reality, his money has appreciated. The money he puts in stock market, the stocks have gone up. Yes, because of which 7,000 rupees has become 8,000 rupees. Unfortunately, since the currency depreciated from 70 rupees to 80 rupees, he is still getting $100. So 2 months back he put in $100, even today he is getting $100. Will he be interested in putting in Indian market? No. So This is a very important point. Foreign investors, they will be thinking twice. If a particular currency is going down continuously, is getting weakened continuously, they will think twice or thrice to put their money in that particular market. So this is another problem with weak rupee. This is another problem with weak rupee. I hope you have understood all these aspects. Okay, so let me just summarize the impact. First thing, not much positive impact on exports. I have already told you the reasons. Negative impact on imports, negative impact. So imports became costlier now. Third one, debt payments, principal as well as interests became expensive. Investors will be hesitant, will not be interested, will be hesitant in investing in India because currency is weakening. Even if stocks go up, if the currency weakens, what is the point? No use. So these are the different effects of weak rupee, and Indian economy is facing these problems now. Now, how did RBI respond to this crisis? We are saying that rupee has been weakening, but then RBI should do something, right? RBI is the foreign exchange regulator. RBI maintains foreign exchange reserves in India. But how did RBI respond to this crisis? RBI has done multiple things. I will take you through all the measures that RBI took one by one. First thing, forex intervention, very very important. Forex intervention. What is the meaning of intervention? So rupee is depreciating against dollars. Why? Because more people are selling rupees and buying dollars. Because there is a lot of demand for dollars, dollar is strengthening. So what can RBI do in such scenario? Remember this, whenever there are more number of suppliers available for any product, its value goes down. Whenever there is scarcity, its value goes up. Yes or no? So you go to a market, you go to a fish market, and more number of people are coming and fewer sellers. Sellers are less, but more number of buyers. The value of fish goes up. If not many came, but there are more sellers, then they will reduce the price of fish. Supply and demand. Now the problem that we are facing is more people are coming to, so dollars, we are going to market for purchasing dollars. More people are coming to market to buy dollars. Not many dollars are available, because of which the price of dollar is going up. Now what is RBI doing? RBI started supplying dollars. Supplying dollars means it started selling dollars. It is going to market. RBI is going to market. It is selling dollars. No, you can come to me. I am ready to sell. I have a lot of dollars. RBI has close to $630 billion reserves. It used to have $630 billion. It has now gone down by around $55 billion. So RBI had lot of foreign exchange reserves. Now RBI is saying, I am also selling dollars. So if someone wants dollars, you can come to me. Now the supply of dollars in the market goes up. When the supply of dollars in the market goes up, the dollar value will go down, which means rupee value will go up. So this is how RBI has tried to control the fall of rupee. Are you getting this? To control the fall of rupee, you need to weaken the dollar. How will you weaken the dollar? By selling dollars. By increasing the supply of dollars, you can reduce the value of dollar. By reducing the value of dollar, you can increase the value of rupee. This is how RBI has tried to control the fall of rupee. This is one aspect that RBI has done. First one is forex intervention. This is called foreign exchange intervention. Directly getting into the market and then trying to arrest the fall of rupee by selling dollars. Second measure that RBI has tried to do, very very important aspect, trade settlement in rupees. Very very important point, very very important point. Just remember this. I'll give you one example. Let us say there are two countries, there are two buyers, there is one buyer and one seller. He is a buyer from India, let's say he is a seller from let's assume Russia or China or any country, Japan. Let's take it as Japan. You can take any example. Okay, now in order to transact between these two countries, in general what happens is dollar is the reserve currency. So whenever this Indian wants to buy something, he would keep dollars with him. Even two different countries also transact in dollars because most of them believe in dollar. Okay, so Indian would pay him in dollars, he would convert this dollar into his own currency, which is yen. That is how things happen in general. Now in order to reduce the dependence on dollar, completely, RBI has now allowed settlement in Indian rupees. Very important point. RBI is now allowing settlement in Indian rupees. What is the meaning of this? Very very important. I will explain it using an example. Okay, I'll explain this using. So let's take an example, right? So there is this is India, and there is one foreign country, and you have a buyer here and you have a seller here. Whenever this buyer buys something from the foreign country, which means it's an import transaction, he normally pays in dollars. Now RBI is allowing trade settlement in rupees, which means instead of paying in dollars, this person can directly pay in rupees. You can directly pay to the seller in rupees. How? Seller will open a bank account. The seller's bank will open a account called Vostro account. This Vostro account will have Indian currency. Vostro means your money in our bank. Whose money? RBI. Indian money. So Indian money in our bank. This is called Vostro account. Got it? So this is called Vostro account. So this seller's bank can open a Vostro account with RBI and they can maintain Indian rupees. So the buyer, whenever he is buying something, he can directly transfer the money in Indian rupees from Indian bank account. So this to this particular Vostro account. This is how you are settling the import trade without using dollars at all. Without using dollars, you are directly settling the trade in rupees. Similarly, when you are exporting, the same thing will happen. You are exporting something to a foreigner. The foreigner is supposed to pay you in dollars, then you go and convert it into rupees. Instead of doing that, he can directly use the rupees which are already there, or his bank can use the rupees that are already there and pay you in rupees directly. Are you getting it? They can pay the money in rupees. So while importing, you will pay in rupees. While exporting, you are receiving the money in rupees. So it's a specific arrangement between India and some countries. Not all countries. India has such rupee trade agreement with some of the countries. So whenever you're transacting, whenever you're exporting or importing, the transactions can happen directly in rupees without relying on dollars at all. So this is one action the Reserve Bank of India has taken to reduce the dependence on dollar and increase or improve the situation of rupee. Are you getting it? I have spoken about two things. Forex intervention is one thing. By selling dollars, RBI has tried to reduce the fall of rupees. The second one is by allowing trade settlement in rupees. So this is one. Next one that RBI did, the third action that RBI did is higher interest rate. Higher interest rates are allowed, higher interest rates on FCNR, foreign currency, very very important, non-resident accounts, foreign currency non-resident account, and there is something called NRE, non-resident external rupee account. Are you getting this? For example, there is an Indian who is earning money abroad. There is an Indian who is earning money abroad. This person can maintain an FCNR account with ICICI Bank or HDFC Bank of India. He can maintain an FCNR. So whatever money he is earning, which is dollars, he can keep in this particular account. That is why this is called FCNR, foreign currency account. Even though it is maintained by ICICI Bank, it is a foreign currency account. So he can maintain this account with ICICI Bank. He can maintain it in dollars. He can also maintain this in dollars. This way, ICICI Bank will have a lot of reserves of dollars. When ICICI Bank has dollars, it means RBI has dollars, which means Indian system has dollars. So by increasing the interest rates on these accounts, you are encouraging more and more Indians settled abroad to put their money in Indian FCNR accounts. When you are putting their money in Indian FCNR accounts, we are getting the flow of dollars. So RBI will have more flow of dollars because of this. When you are increasing interest rates, they will put more money in these accounts. That way our inflow of dollars will go up. So this is one aspect that RBI has done. RBI has also allowed foreigners or FPIs, foreign portfolio investors, to invest in Indian bonds in more categories. Which means generally they are allowed for 5 year, 10 year, 15 year. Some bonds with some maturities they are allowed. Now RBI has increased the investable universe. Investable universe means they can invest in dollar bonds of different denominations, like 7.5 year maturity and several other maturity period. Let's say earlier they can only invest in 3 kinds of Indian bonds. Now RBI is allowing them to invest in more kinds of bonds or more maturity bonds. When it is giving them more choice, it is likely that more investors will come and more money will flow into India. If someone has to invest in Indian bond, they have to buy rupees and sell dollars. Whenever they are buying rupees and selling dollars, rupee will strengthen. So this is another action that RBI did. It has increased the investable universe of Indian government bonds. Very important point. Okay, so many things that RBI did. What else did RBI do? RBI also relaxed the ceiling on external commercial borrowing. ECB. What is external commercial borrowing? Any Indian company can take money from foreign banks. You can take money from, let's say, Citibank US. From Citibank US you can take a loan. But RBI generally has certain limits with respect to interest rate, with respect to amount taken. Now RBI has relaxed those limits. It has relaxed those limits, which means you can take more loans from foreign countries. You might think, how will it help? When you are taking more loans from foreign countries, dollars will flow into India, right? They will give you money in dollars. That money comes to India and you will have to sell those dollars in the market and convert them into rupees. So this way, dollars are coming to India and you are selling those dollars. So you are increasing the supply of dollars. By increasing the supply of dollars, you are improving the value of rupee. This is another aspect that RBI did. It has relaxed limits on external commercial borrowing, thereby allowing more money, more dollars to flow into India. More dollars to flow into India. So these are several things that RBI did to arrest the fall of rupee. To arrest the fall of rupee. So I will write all of them one by one. You can maintain this. First thing, forex intervention. The second thing that RBI did is trade settlement in rupees. interest rates on FCNR accounts has gone up, which means it has allowed the domestic banks to offer more interest rates. When they offer more interest rates, Indians who are living abroad, they will be interested in putting their money in FCNR accounts maintained by Indian banks. When they are investing more money in these accounts, you will have more dollar flow. Okay, then ECB relaxations, external commercial borrowing, it has allowed certain relaxations. And also investable universe, which means foreign investors can invest in more number of Indian bonds with different maturity levels. Earlier they had certain restriction, they could invest only in 5-year maturity, 10-year maturity, like that. Now is expanded the scope, so more number of investors will come in and they can invest in more number of Indian bonds. So these are the things that RBI did. But what more can RBI do? Is this enough, or can RBI do more? Very, very important, right? So the author is also suggesting certain steps. Apart from the things that RBI is already doing, he is suggesting certain steps. He is saying, let Indian government, very, very important points, should expedite means speed up. Expedite means speed up. What? Indian bonds should make an entry into global indices. Like JP Morgan's bond index and Barclays index, something like that. So what will happen when Indian bonds are included in that? So I'll give you one example, then you will understand what I am trying to say. Let's say there is this bond index. This is a global bond index. So this index will have indices from different countries. Like your Sensex. In India you have Sensex, right? Sensex has 30 companies, top 30 companies in India. So all these 30 companies in India are part of Sensex. Whenever any company goes up, out of all these companies, if the majority companies shares go up, Sensex goes up. If the majority company shares fall, obviously Sensex falls. This is how it happens. Similarly, you have these global bond indices in which bonds from United States, China, India and all these, now India is not there, Japan and different countries' bonds are listed there. Now what happens when India is also part of this index? What happens is there are several debt funds. What is a debt fund? A mutual fund which puts money in bonds and not stocks. A mutual fund that puts money in bond. What is a bond? Bond is something that pays you fixed interest, right? Bond is something that pays you interest. Where in stock market you buy a stock, you're taking ownership of the stock. If the stock goes up, you will also go up. If the company earns more profits, the stock value goes up, your investment value goes up. It is not like a loan. It is like you are taking part of the company. It is taking part of ownership of the company. But in bond, you are giving some money and you are expecting some amount of interest on that. Depending upon the interest offered by different bonds, you will invest your money. That is bond. I hope you have understood. So there are some international debt funds which make decisions based on the indexes. They will say based on the indexes contribution. For example, US is having 50% value in that index. Then the debt fund also will put 50% of money in United States bonds. Are you getting this? Depending upon the contribution of a country in that particular bond index, there are some debt funds, they will allocate their funds according to that. When Indian bonds are also listed, let's say Indian bonds are listed in this with around 10% weight, that means any debt fund which is tracking this index, whatever money they have, they will put 10% of their money in Indian bonds. They will put 10% of their money in Indian bonds. Earlier, since Indian bonds were not part of any of these indices, they were not caring. They were not caring. If someone is really interested in coming to India, they will come and they will buy. But when your Indian bonds are part of this index, then it will attract the attention of global investors. Global investors will be attracted when you are part of an index. For example, there are so many companies in India, but only 30 are in Sensex. There are thousands of companies in India, but only 30 are in index, Sensex. When these 30 companies attract the attention of all the investors, the fact that these 30 companies are in Sensex, which means they are big, they are very good companies. That is why they are in Sensex. It will attract the attention of all the investors. Similarly, if Indian bond is part of global index, and it will attract the attention of all the global investors, and they will allocate some amount of their money in Indian bonds. That is how you can attract more foreign currency to India. That is how you can attract more foreign currency to India. So this is what the author is suggesting. He is also suggesting some of the Indian companies like Reliance Industries Limited and some other big companies can be listed in global stock indices. Global stock indices like MCCI, FTS. You don't need to understand all of them. Just understand this concept. When Reliance Industries Limited is part of this, it will attract the attention of global investors and they will come and buy Reliance Industries Limited. So this is what they are saying. So let's have our stocks and our bonds be part of global indices that attracts the attention of global investors. There is more likelihood that they will come to India, they will put their money in Indian bonds and Indian stocks. These are the things that this man is suggesting to RBI. RBI can do these aspects as well, and the government can do these aspects as well. These are the suggestions he is giving to Government of India and Reserve Bank of India. This is how we need to arrest the fall of rupee. This is what the author is saying. So all these things are already there in the editorial. I have just tried to explain them, tried to simplify this. Take care. Bye-bye. Let's move on to next article. The second article of the day is about Antarctic Bill, and it was passed in Lok Sabha. This comes under your GS paper 3 environment. So what is this bill and what did the government try to do here? See, look at this news. On Lok Sabha on Friday passed this particular bill, Antarctic Bill. So why did India had to do it? Because under the India's obligations as a signatory to the Antarctic Treaty of 1963. So India is a signatory to this particular treaty. India became a member of this treaty in 1983. The treaty was there since 1963, but India became a signatory of the treaty in 1983. And according to this treaty, all the member countries, which includes India, should make a specified law with respect to Antarctica. What happens when you don't have a law? When you don't have a law, all the Indians who go to Antarctica on a private or a research expedition, they will be under international law. They will say, international countries, other countries will say, your country doesn't have a law, so you are under my law. So they will be under the purview of international law, and India will not have any stay in this. That is the reason India was asked, all the member countries, there are 54 member countries of this Antarctic Treaty, all the member countries are asked to make laws, and India has finally made a law for Antarctica now. Okay, according to this law, what will happen? The objective of the law, look at this, it is to regulate the visits and activities to Antarctica, as well as set ground rules for potential disputes that may arise among those present on the continent. So if you have to go to Antarctica, Look at this. Private tours or expeditions to Antarctica would be prohibited without a permit or the written authorization by a member country. Now India is a member country, so you have to take permission from Indian government if you want to go to Antarctica as a private tour or as a research expedition. If you are violating, the bill also prescribes some penal provisions. You will be penalized. You will be penalized. The bill also lays out a structure for the government officials to inspect a vessel. They can inspect your vessel. They can also conduct checks of research facilities. The research facilities that you are maintaining, government can also check them. It also directs creating a fund called Antarctic Fund. This will be used for protecting the Antarctic environment. And the most importantly, the bill also extends the jurisdiction of Indian courts to Antarctica. Very, very important. Now Indian courts can give judgments on issues related to Antarctica where Indians are involved. Very, very important. And lays out penal provision for crimes on the continent by Indian citizens or foreign citizens who are part of Indian expedition. If the foreign citizen is also part of Indian expedition, he is also part of the Indian troop which is conducting research there. If he is committing certain crimes, Indian courts can give judgment. And people who are in the precincts of the Indian research stations, in the premises of Indian research stations, all Indians and foreigners who are part of a troop and who are part of this particular research station, they are under the direct purview of Indian courts now after this bill becomes an act. So very important bill from the perspective of UPSC. So all the important points are already there in this news article. So that is the reason I have not written anything. You can directly make notes from this article. So this is the third article of the day. Supreme Court directs fresh window for transition tax credits. Very important. Transition tax credits. So what is this transition tax credit? This again comes under GS paper 3, Indian economy, taxation. So before 2017 we had a different tax system, and from 2017 onwards we have GST. So imagine, very, very important aspect. Let's say there is a company. Before 2017 there is this company, and we have this government of India. Company pays a lot of taxes to government. Whatever tax they are supposed to pay, they pay. At times government refunds under certain schemes, under certain things, government gives some tax credits or government refunds. Refunds are not generally in terms of money, but in terms of tax credit. What is the difference between tax credit and money? Both are same. Look at this. Let's say government has given a tax credit of 50 lakhs to a company. So because the company has complied with the government's policy, or company has done something that the government wanted, because of which the government is willing to refund a lot of tax to that particular company. So government issues tax credits, which means this 50 lakhs will be with the government account as tax credit. It will not come to the company, but in future the same company, in future if it has to pay, let's say 25 lakhs tax to government, the company can use the credit. Since I already have a credit of 50 lakhs, so government allows the company to deduct this 25 lakhs in the tax credit. So instead of paying 25 lakhs, the company simply reduces this amount from the tax credit available with the government. So it will continue to have another 25 lakhs of tax credit. This is how tax credit concept works. The money stays with the government, but it remains in the form of a credit. So in future, whenever you have to pay tax, instead of paying, you can tell the government to deduct it from the credit available. That is the concept of tax credit. Similarly, many companies had these tax credits with the government, but in 2017, when the system has moved to a new tax system called GST, all these companies had to move their transition tax credits. They had to transition the tax credits they had to this new system. Earlier system was different, new system is different. So they had to follow a procedure and then transfer all the credit they had to this new system. But in 2017, because of some technical glitches or issues, some companies could not transition. Some companies, even though they had credit available with the government, because of some technical errors, they could not transition that tax to GST system in time. Now, although they had money lying with the government, they are unable to use that. They are unable to claim for future tax obligations. Now, they approached the Supreme Court. Now, Supreme Court has allowed 2 months window. 2 months window. Because of technical issues, they could not do it. Now, the Supreme Court has allowed them to file fresh transition request to the government over next 2 months, September and October. So they can do it in September and October. So it is allowing them to transition the tax credits to new system in these 2 months. This is the concept of transition tax credit. From previous tax system, whatever credits they were having, now they have another opportunity to transition to GST system in these 2 months. Final article of the day, Dinesh Gunawardena sworn in as Sri Lanka PM. So in the last few days, many things happened in Sri Lanka. Gotabaya Rajapaksa, who was the president, he was asked to move and the people revolted against him. So he fled the country, he left the country, and in his place, the Prime Minister, the then Prime Minister Ranil Wickremesinghe, this man is your Ranil Wickremesinghe. Ranil Wickremesinghe became a president. He was elected as the president. So since he was the Prime Minister earlier, he resigned to this and he became president. Now this became empty. So this man called Dinesh Gunawardena, he was now sworn in as Prime Minister. So current President of Sri Lanka is Ranil Wickremesinghe. Current Prime Minister of Sri Lanka is Dinesh Gunawardena. Earlier it used to be Gotabaya Rajapaksa President, Mahindra Rajapaksa Prime Minister, Rajapaksa brothers. In fact, most of the Sri Lankan ministries, higher officials, higher constitutional positions were all filled with Rajapaksas, and people revolted against them because of the current crisis in Sri Lanka. So they wanted both Rajapaksa brothers to go. First, Mahindra Rajapaksa, who was the Prime Minister, who left, he left first, and now even Gotabaya Rajapaksa was also forced to leave. So these two are the heads now. One is a president, other one is Prime Minister. So that's about it. So we have covered 4 articles today. The first one I have covered in a detailed manner. So share your feedback in the comment section. Take care. Bye bye.